Do you think we are in a bear market right now? And number two, something I was interested in, there are a few different theories. You probably know the 4-year cycle theory. And there's also another theory about lengthening cycles. And even though you are, of course, a long-term investor, price will be to a certain degree in the short and midterm also interesting to you. So I really would like to know, do you think we are in a bear market right now? Do you actually think this is just the beginning of a much bigger run towards the upside in the mid run, let's say? And what do you think about the 4-year cycle theory and the lengthening cycles?
Well, I think we're in a consolidating plateau, and I think it's a pretty good plateau because.
Hey everyone, and welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy so far. With tax dollars so desperately needed, it's fair to assume the IRS will focus on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 30 seconds. Step 1. Open a crypto RIA account with our friends at iTrust Capital, the world's largest crypto RIA platform with over $3.5 billion in transactions and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link, itrust.capital/value, in the description below to get $100 in Bitcoin when you open and fund your account with iTrust Capital. And now, back to our video.
There are all these conventional mainstream investors, and they've been watching Bitcoin. And when Bitcoin was going up too fast, when it was running parabolic, they're afraid to buy in. But right now, sitting in a plateau where they're a lot more likely to buy it. By the way, return looks to the Nasdaq. We got some really great news this week. Miller came out and he announced that half of his personal net worth, half of his personal portfolio is invested in Bitcoin. And he said the other half was like an Amazon. He's held Amazon for 25 years or whatever. And, Amazon is famously volatile. It went through lots and lots of 80% downs and a 90% drawdown. And he's just been sitting forever. He's like a classic hodler. And Amazon's big tech. In essence, what he said was, I own digital gold and I own a big tech retailer, and that's half and half. Now, a year ago, he said, I have some, but he never said 50%. Yeah. Now you've got all the other mainstream investors that have some gold exposure, the Paul Tudor Jones and the Stanley Druckenmillers and the Ray Dalios and the, fill in the blank. And they're all starting to wake up to this. And when they see Bill Miller, who's runs multiple billions of dollars and is a billionaire in his own right, saying this is the only thing I can find that can go up by a factor of 10 to 50, that also is a store of value asset, right? Then they start to pay attention. Now, if Bitcoin was trading at an all-time high and it was like on fire, they'd be afraid. But you kind of like the idea that Bitcoin is 40% off the all-time high and it's catching its breath. And you think maybe this is an entry point. And in fact, I've seen lots of high net worth individuals and family offices that they're just now starting to do an allocation to Bitcoin. Like maybe we should allocate 5% or we should allocate 2.5%, February they would have been, or March or April or May, they'd be afraid. And now they're through a lot of the risk, the China crackdown de-risked the situation. The consolidations de-risk the situation. Every single publicly traded miner, every miner that comes public de-risks the situation. All the political, the regulatory clarity is de-risking the situation. And so I don't think we're in a bear market. I think Bitcoin it's moving through this phase where it moved from 4,000 to 40,000 with volatility, and it's going to move from 4,000 to 500,000. I mean, the next plateau is the gold plateau, right? To basically digital gold replaces gold and flips gold, and that's like a $500,000 number, I think. And then after that, it's really just a property index or a monetary index, which should be 10x that. You know, what I see is a move from where we are to 500,000 over 3, 4, 5 years, and then a move over the following 3 to 5 years. You know, it could take 10 years, but a move in the next epic from the 500,000 to $5 million range. Because ultimately, people say, what is Bitcoin? Well, Bitcoin is the apex property of the human race. It's the only property you can truly own. So the question is, who wants it? Well, everybody in the world with weaker property. So what is weaker property? Well, how about like a second house in Africa? Like how about land in the middle of Africa or Asia or South America? How about a building? And fill in the blank. Would you rather own a building in Venezuela or Argentina? How about a ranch in Colombia? Like everywhere in the world where you have excess money and you want to invest in property, the problem with investing in a currency derivative is the currencies are collapsing, right? And they're collapsing at 10, 15% a year in the Western world, but they're collapsing at 40%, 50, 60% a year in the developing world. So bonds, they're weak property. Real estate is weak property because you've got a politician that they're going to tax it and they can take it away from you, and you can't move it if you need to leave. And you can only rent it to people in the country. So, and then equities are weak property because the CEO controls that equity. It's a security. And if you own securities, the bank controls it. Like, let's say you own a security, you live in Zimbabwe. Well, the government of Zimbabwe can take it away from you. Try buying it at JP Morgan, they can take it away from you. The CEO can print more equity and they can take it away from you. A random government, in Australia can put a fine on Google and they can take it away from you. A union can unionize, right? So if you're holding securities, you've got lots of risk. If you're holding real estate, you've got lots of risk. If you're holding gold, well, the bankers can print more gold paper and the gold miners can mine more gold and try to move through an airport with $10 million of gold, or try to move through an airport with $10,000 of gold. Try to move through an airport with $1,000 of gold. I tried to move through an airport with a pen knife that Amazon sold me, and it was labeled as TSA friendly. I couldn't get a knife that's like a quarter-inch or half-inch blade through a metal detector in an airport. So your property is all weak, all of it. And so how much is weak? Hundreds of trillions of dollars of weak property. So ultimately, I think that there are 8 billion people on the planet, or there shortly will be 8 billion people on the planet, and they're all going to want some amount of digital property instead of like that second Airbnb or that investment property or that equity. I even did a little survey on Twitter where Cash App let you decide whether or not you wanted to give someone the gift of a stock or the gift of Bitcoin or the gift of cash for Christmas. And I actually put in a survey. I said, what do you want to give away? Cash, stock, equity, or Bitcoin. It's like, 93% Bitcoin, 7% stock, and the return was 5x the NASDAQ. Like that is to say, everybody intuitively understands that equity or securities are risky and that Bitcoin is property. And so it's like a 20 to 1, 10 to 1 or 20 preference if they need to own something.